Welcome, and thank you for joining us again for another session of the annual filing season program brought to you by My Tax Courses Online. So today is going to be a really interesting topic in a whole series of topics. We were asked, what do you want to hear this year? And a list of topics was given to us on additional tax matters that we can talk about as annual filers of tax returns. So today we're going to talk about transactional tax returns. And what do I mean when I say transactional tax returns? This is when a client of yours may say, well, I owned a business, or I owned a series of assets, of pieces of property, or pieces of equipment, and I've sold them. So how do I report that on the tax returns? What does it mean? How do I define them? How do I report the sale? And what's the taxation on the sale? Honestly, we get a lot of questions throughout the year about how do we do this, Roman? What does this form mean? What does the form 8594 mean? We're also going to go into estate tax returns. Every year, we kind of touch on estate tax returns. So today we'll go into a little bit more depth about why you have an estate tax return, what it does, again, the basics behind it, the definitions, and what you should know. And then finally, the last section is on trusts. Probably one of the bigger sections that I get questions on throughout the year after all of you have watched our program. Roman, what do I do with this trust? My client says he has a trust, or she says she has a trust. I don't know. I don't know if they've done the documents. I don't know if they have a deed to the house within the trust. So we're going to go through the definitions of what it means to have a trust, what it means to be a grantor, what it means to be a beneficiary. Is it revocable? Is it irrevocable? These are all things you're going to hear today as we go through this session for this year. As many of you know, and my name is Roman Basie. I'm an attorney, a CPA, a real estate broker, and a title insurance agent. The reason why these topics are so near and dear to my heart is 90% of my practice is mergers and acquisitions of privately held companies across the United States. So we get a lot of questions about this. Another thing you're going to touch on today, in addition to all of that, is 1031 exchanges. We have a new tax law, right? And we've gone over the new tax law through the annual filing season program. This first section, we're going to hit on a couple of highlights of that. One of those highlights was 1031s. Those of you listening probably are aware that 1031 exchanges, the tax-free exchange of property, is now limited. And you're probably sitting there saying, well, it's limited, Roman, only to real estate. We can only do a 1031 for real estate now. And I'm going to stand here and tell you today that's not true. We still have tax-free exchanges of certain property, stock, and we're going to go into that later. In a few minutes, we're going to talk about the IRS Form 8594, as I said. When we buy or sell a business, or when we buy or sell a series of assets, it's IRS Form 8594, and it's the allocation that we report to the IRS as tax return preparers. So it's extremely important that we understand why we do that.